Hello, everyone. John Coleman here from the Tea and Mortgage podcast. Can you believe it? It's number 13.
Hey everyone, how are you? This is Norm Schriever, John's co-host, and like you said, episode number 13, and we're in 2024. So as always, thanks so much for listening, subscribing, and sharing. We truly appreciate it. All right, now on Tea and Mortgage, episode number 13, we're going to talk about something that's really important for a lot of expats and immigrants who come to Ireland, especially from the United States, and that is the differences in the system and the process of buying a property and, of course, getting a mortgage in Ireland versus America or the US. And so, John, you were going to go over some big picture points or milestones in the mortgage and property buying process in Ireland, and one by one, I'll come back and tell you how it's a little bit different in the good old US of A.
Yes, no, certainly. Thankfully, I do seem to have carved out a nice niche of American and Canadian expats who have put their trust in me to help them. It's funny how it starts. You get one or two, and then suddenly you do a good job, and they all talk to each other when they come over. So it is different, and it's completely different for someone coming into Ireland and being used to a certain way of doing things, and then suddenly thinking it's going to be the exact same. So as you said, I'm going
Mm.
to break it down as to how it works here, and you'll basically tell me how it's a much better way back home. Yeah.
No, no, not at all. I think you guys have a pretty good system as well. But to your point, it's absolutely crucial that people understand the differences because there are big differences, and what you don't know can hurt you, especially financially or getting frustrated or what have you, when you're trying to buy a property in Ireland.
Well, yeah. Here's the first thing I would tell anybody, right? Whether they be an expat or whether they be a European citizen or an Irish citizen. The first thing you need to do before you start looking to go home is knowing how much the banks are prepared to lend you, or actually having yourself formally approved, because we're all human beings, and why would you bother getting yourself your finance in order because you don't have a house yet? But in
Hmm.
reality, the way the world works, or the way the buying the property works, certainly here in Ireland, is that you need to have your finance in place, um, because sometimes they won't even sell it to you. They won't even let you look at it unless you can tell them that you have been formally approved. I do tell people to research the market before they have their finance approved, but not to fall in love with a home for that very reason. Now, that particular point is even more relevant to expats. You have some that would come over and their mind is made up. Ireland is going to be their new home. So the first
Mm.
thing they want to do really is get themselves a home. They don't want to continue to pay rent. They want to settle roots, and they've made a decision. This is their life. This is their career. They're going to stay here. Now, with expats, it can be more challenging. Some of the banks will want them to be here at least a year, minimum 6 months, and some of the rules change depending on how long they're actually in the country. So
Mm.
that's something they need to be very aware of at the park. But I've even got expats basically calling me after 2 months and saying, I want to buy a house now. I'm going, oh, I love what you're trying to achieve, but let's start planning this out so that this is what you can do if you wait 6 months. This is what you can do if you wait 12 months, and then plan it out accordingly. So I don't know, how does it work back home?
That's interesting. Yeah. And you mentioned that you have to be just about fully pre-approved to, get your mortgage in Ireland and go house hunting. Where in the US, that pre-approval, it's also called a pre-qualification, is scary easy. It's basically you go to a mortgage broker, a bank, whoever, and say, okay, this is my social security number. You fill out a quick application. You go over your income and whether you're self-employed, whether it's salary from a company, whether it's commission based. It's a lot easier if it's just a set salary where it's predictable every month and secure. Your credit score is huge, and they'll pull your credit and look at the three different credit bureaus and your credit score and see if you have any missed payments, missed credit card payments, mortgages in the past. Um, they're going to look at your assets, meaning your bank statements, your retirement accounts, and then they're going to look at your debt as well. And it's all of this is very easy to calculate within, half an
Do they
hour
look?
or an hour.
Sorry, Norm, that sounds ridiculously easy. do they look at for paperwork? Do they look for bank statements, like physical bank statements, pay slips, documents like that, or is it all kind of
See, in the beginning, no, because this is just basically getting you a letter, a pre-approval or a
okay?
pre-qualification
Is
letter, and
that
that
letter worth the paper it's written on? So that would be the first challenge I'd have to that system. But you
it
maybe
it
it's
is for the that's a good question. It is the only reason it's sort of like the gatekeeper, it's like your permission slip to get in a real estate agent's car and go looking for houses. Because any good real estate agent without if they have a client who says, "Oh yeah, I'm pre-approved, don't worry." You go, "Well, all right, we need to submit that letter with our offer." And so any offer where you say, I love this house, let's write an offer, I want to buy it, part of that offer package is going to be that pre-approval from your mortgage lender, right? And without that, any good seller and their real estate agent representing them will say, whoa, wait a sec, is your client approved or pre-approved or what's the financing, right? So it's very informal, but it is actually sort of necessary. And then, it again gives you permission to go out and go house hunting.
in a way that sounds a lot more efficient than the process here. But I'm then wondering about, and they did try, or one of the banks did try something like that here in the past. And what happened was all these pre-approvals that were kind of almost just given sort of blindly when they actually went and found a house, and then suddenly all the paperwork was coming in to back all this up. Suddenly the number of pre-approvals were sort of, well, oh, well, actually, no, we don't think you're good enough anymore. So suddenly it became chaotic after
Mm,
the fact, right?
mm,
So all the heavy lifting is done in with the banks here in Ireland before, so that once you go and find a house, you then just give them the address of the house when you find it, and it's quite the underwriting has been done. What they did try that system that you've described there here in the past, it suddenly when all the paperwork and you maybe had 30% of the pre-approvals were said, actually no, we don't want to lend to you.
mm.
Okay. So you can imagine that became quite chaotic, you know.
Yeah, and there's definitely merit to that. Like you said, doing the heavy lifting in the beginning. This is like basically in the US, like I said, you get permission to go house hunting. You're gonna submit that offer. It's just a letter, literally one typed up letter from the mortgage broker or the bank. So there's a lot of trust and credibility with that person. And let's say that person writes, my client is approved for $500,000 and I check their credit, their debt, their income, their all that, and they're good to go, and then you can't deliver on that as a mortgage person, well, that's your reputation. That real estate agent
Gotcha.
or
Yeah.
both real estate agents aren't going to, use you in the future. But all of those things also aren't formal requests from the bank or a lender. They're just basically the lender using their judgment and looking at the programs, knowing parameters, pulling credit. Now, when let's say you go out and you see a house you love and you want to write an offer, like I mentioned, you submit your offer and certain documents, and you'll submit that lender letter when you write an offer, that pre-approval letter. But let's say the seller says, yes, we accept your offer and contracts are signed. Well, then your original question, then you have to submit all your documents to the mortgage person. And so then
Okay.
your tax returns, your bank statements, you have your report all set, any asset statements, all these different things. Then it's really the formal, intensive document, flow of
Yeah.
documents to the bank.
In truth, that is, in my opinion, and you know I'm always beating a drum about the service of the banks here in Ireland. In truth, that is a much more efficient way of doing it because, well, here in Ireland, we have to go through all this getting the paperwork together, and then we go and try and find a house. But if we don't find a house, if that approval is out of date in 6 months, you have to get all your paperwork
Yeah,
again, right?
yeah.
So it's a very torturous process.
Or if
It,
rates change, right? If rates
well, no,
go
that
up or
doesn't matter
down,
because
then
you only ever pick a rate at the point when you find a house. So that's not
oh,
your
okay, okay.
approval. Your approval will last for 6 months regardless. When you find a house, so in truth, there can be value in being pre-approved sooner than if a rate did go up, because suddenly they might have lent you X today, but if the rates went up, they might only lend you X minus 20 grand or minus. So there is sometimes value in having that. But to sort of touch on your So the difference when we get the approval, then the my client or the applicant will have 6 months to go and find a house. That approval
Hmm.
lasts for 6 months. Okay. Then when they find a house, then it's basically they've given all their paperwork. So it's a much quicker process to actually getting the
Yeah.
legal loan offer out to the solicitor. There might be one document that will be required, a copy of the valuation of the property it goes in, and then they issue a loan offer, which would then allow, because the legal system here, the solicitors, and obviously you call them lawyers, but the solicitors here would only allow a client sign a contract if there's a legal loan offer from the bank.
Mm, interesting. And with the timing, you mentioned a little bit of that timing. In the US, so you have your pre-approval letter, you're out with a buyer's real estate agent, which we'll talk about because that's a big difference too, right? And then you see a house, you write an offer, the seller accepts it, you formally sign the contracts. That starts basically the clock on, or the calendar on, usually it's a 30-day, and they call it like an escrow process. You're in escrow, meaning you have 30 days to get everything done until you close the deal. And that's for the seller, that's for the buyer, that's all the inspections, and that's also going through the mortgage process where they're
30
gonna
days,
look.
that sounds like heaven to me, Norm. The time from agreeing to buying a house to actually getting the keys to your home. I'm going to ignore a new property for the moment because that's you're waiting for that to be built. But if you're buying it off another person, you're kind of looking at anywhere between 10 to 12 weeks.
Wow.
Yeah.
That's yeah, that's like molasses slow, huh?
Yes, but I bring this to everyone's attention, especially people who are coming into the country for the first time and are buying, so that they know
They
the timelines,
understand. Yeah.
and they can plan accordingly. Because obviously, one of their biggest concerns is, okay, well, I'm renting. When do I tell my landlord I'm moving out?
Yeah.
And trying to juggle it so that you're not paying rent for a full month and a mortgage can be difficult because there are a lot of moving parts. So they might have agreed a date, but there can be a delay with the seller side. There can be a delay with the bank. There can be a delay with the buyer's
The
solicitor, the seller's
builder, right?
solicitor. Or if there's a pyramid, so as in there's a chain, and the people who are selling you the property are buying another, and there's a delay in that one. So there's a lot of moving parts, and 30 days sounds like phenomenal. I'd be all in favor of trying to make it happen on that basis, but
To your point, though, that is like, it sounds like heaven to you because it's fast, but there's also a lot of pressure and every day counts, right? And there's certain milestones within the transaction where once you sign off, let's say usually it's about 14 days, they call it removing contingencies. Once you sign off on that, that means you've seen your inspections, you've gotten your appraisal or whatever reports you, and you're saying, yes, I'm going forward. And if you sign those papers and you try to back out afterwards, you're going to lose your deposit.
that's
So
correct.
it moves, 30 days, but then you take out weekends when people aren't working and you're waiting for underwriters, you're waiting for, from the mortgage company or bank, you're waiting for home inspectors, appraisers. And so it
That
comes
does
down to the
sound very
wire.
tight. It sounds very tight in an Irish context, as in the way we move. And solicitors here are notoriously very slow at moving. Now, they need to make sure all the detail is absolutely 100% because it's on them. But that being said, they do move very
Yeah.
slowly. So, 30 days does seem like a lot of
Now,
pressure.
sometimes they're 45 days. Sometimes it gets down to the end and they're still negotiating about, hey, we found, the swimming pool has a leak. Okay, well, we need another inspection. Let's sign
We
a,
don't have swimming pools over here,
yeah.
don't we?
The bathtub
I
has a
better
leak.
break that to
The
them
the
now,
bathtub
okay?
has a leak. Let's sign an
Yeah,
addendum to add another 2 weeks to the transact. So
yeah.
everything's negotiable, but it marches on really quickly. You mentioned also the solicitor. Talk about the solicitor because there's big
I
differences
think
in.
there's one part of the process I think we should highlight first, Norman, and the solicitor is something I will touch. The buying process that we've kind of almost
Mm,
glossed over here in relation to finding a house. This is where the chalk and cheese from someone coming over from Canada or United States. Here the estate agent represents the seller. Okay,
Mm-hmm.
there is no real realtor system as you know it, whereby there's someone that goes out and is bringing a potential buyer to 5 or 6 different properties and trying to help him find a home. That system doesn't work here. So the individual buyer is very much left to their own devices,
Yeah.
whereby they're going to an agent to see one house, they're going to a different agent to see another house. So there's no relationship built there, and they're ultimately, if they like a house, they're putting bids in and they're wondering, well, hold on, is this guy being honest with me? Now they are, but when you don't know someone and you're putting a bid of 350 and he's coming back and to you the next day saying there's 370 on the table or 450 and it's gone up to 480, whatever that may be, when you're coming into another country, you're suddenly feeling, okay, hold on, am I being played here? That is something that needs to be very. Now you can maybe touch on it a bit better because I'm only know
Yeah.
at a macro level.
He
Maybe you could
hearing that
explain.
from the US system, that sounds like the person is negotiating for both sides, which to me that's sort of cancels out, and that's not really a negotiation. In the US, that system, everyone would end up in court because you know how we love to sue each other in the US and we're ridiculously litigious. So it's in the US how it works is the seller has a seller's agent. Now people can try to sell their home themselves, but it usually doesn't work. But they have a real estate agent just representing them and only them on the selling side. And then when you're buying a house, you have a buyer's agent who's representing you no matter what house you go to. So you could look at 10
Okay.
houses and write 10 offers, but it's going to be with your representation, your buyer's agent. Um, and so then in the transaction, it's the buyer's agent and seller's agent that are representing their parties appropriately and negotiating, working on paperwork, working on terms, and going back and forth with communication, with prices. The buyer's agent's the one finding you houses and, looking at what are your requirements. You want 3 bedroom, 2 bath in this price range. Here's a list. Let's go look at these. I made these call. So and the nice thing is, from a point of who gets paid and when, the buyer's agent, when you're a buyer, you don't pay them anything, a big fat zero. The seller, when you're selling a house, pays for both the buyer's agent and the seller's agent only when it closes. So
Wow.
it's
Okay.
usually about 6% of the transaction, 3% to the buyer's agent, 3% to the seller's agent. And sometimes it's 5.5, 5%, there's some discount brokers, but they never stay in business. But you're typically spending 5 to 6% just on real estate agents when you're selling a property.
Well, that's quite high. If you remember, we did a Breffney Kelly on the show, and she kind of was a little bit of a buyer's agent of sorts here, but completely, I suppose, a little bit different from the way you just described it. But in the
Yeah.
main, it's not the way that system just isn't in operation here. So that takes some getting used to, whereby you're bidding yourself basically, and you're wondering what the hell is going on.
Yeah. That sounds like you're lost in the wilderness. That's why I see it from an American perspective that there's huge value when people come to you. Of course, they come to you for the mortgage process to
But
get started.
yeah, I do try to give them some guidance in terms of how to play the game, shall we call it,
Yeah.
on bidding. But I'd never want to gamble with anyone's money either, because ultimately they're making the choice. But I would certainly try to and give them my thoughts on what strategies I would use when it would come to bidding on a property. Whether by my kind of rule of thumb is try to close it early or steal it off someone at the end, and
Yep.
and and stay away in the middle, if that makes sense. So
Yep.
if you know there's more viewings coming up the following weekend, why would you be bidding? Because all you're doing is bidding against yourself.
Now, let me ask you this. When someone's writing an offer or putting in an offer on a property in Ireland, is there a time expiration? And what I mean by that is in the US, they could say, okay, here's an offer for full price plus $5,000 extra because we absolutely love your house, but you have to respond within 48 hours or else this offer goes away.
You can try that. Yeah, it's not. There's no hard and fast rules around it. To be honest with you, you can make that kind of play on it, and that is trying to close it quickly. In effect, um, sometimes people are like, there's fear when you're buying a property. You don't want to be paying too much, but Like there's a range of emotions. You can be greedy, you want to get it, trying to get it cheap, and you'll probably lose it. Or you could be fearful and you might overpay because you just wanted it so badly. So it's a lot of the bidding strategy is counterintuitive. You kind of need to do things that are just that strategy that you said. I'll put my offer in, but if we haven't got a decision by the end of the Friday or whatever, take it off the table. I'm looking at
Mm,
other properties, and that would be something that I would highly recommend you a client would do.
mm. And yeah, and the other thing
And
with
by the
the
way, you
more,
mentioned an asking price plus five. That there tends to be an asking price, but in the property market for the last number of years, the asking prices just get the ball rolling. Most of the time, it can be anywhere between I've seen anywhere between 20 and 100,000 euro above the asking price, depending on location and when how many people are bidding on the property because
that
of
actually happens. They call that a bidding. Well, a bidding war is multiple people
yeah.
that are really going for the same property when there's a shortage, like there is. I know in Ireland, there's a huge shortage in the US in many areas because of COVID and lower rates and all these other factors that in the past. But like, for instance, in Sacramento, California, where I lived and I'm very familiar and I have clients, they put a listing on the market and they put it at what they think is a full price. And within a weekend of over open houses, they have 20 people looking, five offers, and it gets bid up $80,000, like you said. Now, here's the thing with bidding up, you could come in and say, okay, you're listing your house, meaning you're selling it, a full price is 500,000. I'm gonna offer $1 million. Well, that's great, but it means nothing because to get a mortgage on that and for a bank to actually lend the money, they have to see it appraises for that appropriate
Gotcha.
price.
Yeah,
Yeah.
okay. But there's a little bit of a different view here of sorts. Well, and that example might be slightly extreme, but there is a valuation gets done here as well, okay? And the valuer has to provide free comparables when they're putting the valuation in. So take your example of 500,000 agreed a price. Now, there's an understanding that really the value of the property is what someone's prepared to pay for it. Okay, so there's that rule, but by the same token, the banks are lending money on that property, so they don't want to be lending 90% of a million. That if the guy defaulted suddenly, well, there's no market for that.
Mm.
So that's why it's a similar it's a valuation rather than the same thing really.
And the
Um,
bank does that valuation?
yeah, they have their own panel of people who do. So yeah, it does stop crazy bidding, but if the house is 30 grand more than the previous house that was sold, well, that's not outrageous. Do you understand?
Yeah.
It's the example you mentioned that would be a little bit ludicrous
Yeah,
and
yeah, of course that's extreme. But
yeah, that
like
would be extreme. But 50 grand above what the last
yeah,
that's kind of just well, that's where the market is at this point. There were
yeah.
four people trying to buy this house, and that's where it ended up.
And that person's called the appraiser. They don't
Yeah, he's called the valuer here.
value,
Same
okay.
thing.
And
Yeah.
they're a neutral third party. And
Mm.
so the buyer can't hire their own appraiser who says, "Yeah, I know
No,
this guy," and
each bank would have their own panel of
okay.
valuers, appraisers, basically.
And they're
Um,
held to a very high standard in the US, where because there's so many scams and I could get into that. Maybe another podcast we'll just talk about real estate scams because there's a lot of them. But in a rising market when houses are going up, up, up and it's a hot market, absolutely they could say, "Hey, look at these comparables that have sold recently in the same general neighborhood, same type of home and size, and it's yours is worth a little more." Where you run into issues is if the market is stalling or even going down, right? Or you can't find comparables. But here's what you could do. Let's say you love the house, it's listed at 500,000. You write an offer, the mortgage, let's say it's, just for simplicity purposes, it's for 500,000 and it only appraises for it only appraises for 500, but you offered 520, right? Well, the bank's going to say, we're not going to lend that extra $20,000. So they're not going to say you can't buy the home, but as a buyer,
okay, they'll only lend a percent. Yeah, in Ireland, just
you have to come out of pocket to pay the
yeah,
rest if you
so
really want
just
the house.
to edge again, I'm not sure how it works. Ireland, the maximum the percentage will the banks will lend is 90% of the cost price, which may well be out, but it would need to be a fair value, as you pointed, right? So
Yeah.
they could probably do something. So if if the value was 500, that and that the valuer said, no, there's no house really worth more than 500 here. Well, the bank might kind of, as you said, say, listen, that extra 30K have to come out of your own pocket,
Yeah,
right?
if you
It
really
doesn't
want
happen.
it. Yeah.
It may happen, but I haven't seen it happen in the main. But it certainly would make logical sense. One thing, and I don't know how it is back in the US, the maximum that they will lend here is 90%, or
Hmm.
if you're a second time buyer, 80% of the cost price.
Mm. So
Does that differ?
you ready for
Does that
this one?
differ? Well,
Are you ready for this one? You're going to be blown away.
go on.
There's traditionally, meaning like 1960s, people put 20% down for a house, right?
Yeah.
Now, and especially in the early mid 2000s, it was ridiculous. Today, a lot of people put down 5%, 7%, 3.5%. There's very popular first time home buyer loan programs called FHA, and not just first time, but it's Federal Housing Authority. It's backed by the government. So you only have to put 3.5% down.
Well, you know, with the new properties here, there's a help to buy scheme where you can get up to 30,000. That,
Yeah.
in a way, is one mechanism of actually reducing what the first time buyer has to bring. Okay, so in theory, it's 10%, and it would be if it's in a second-hand house. Okay, but for new properties, that tax back scheme is a way of helping
Yeah.
first-time buyers. But for an American coming in or a Canadian coming into Ireland, they need to be waiting 4 years probably or 2 years, depending on how much they're earning, to really benefit from that. You know.
Mm. Yeah, and so that's a big difference. You definitely need to be cashed up a little bit, have some money in the bank to
Yeah.
buy there. But yeah, and there are programs every once in a while when the market's hot and rates are low and there's no risk or very little risk to the banks. There's, 100% loan programs. Back in like 2003, 4, 5, 6, 7, when everything was so red hot and so irresponsible, which led to a massive US and then global recession and bank crash, bank failures, they were lending 100% no problem,
Yeah.
interest only. You didn't even have to pay
Same,
your
same
full
here,
principal.
Norm. Same here, and
Yeah.
it is what caused like our banks, like your back in the early 2000, 2002, 2003, where they were just throwing money at people,
Yeah.
um, like up to maybe 10. I think I saw 13 times someone's salary, like
Oof.
absolutely nuts, absolutely nuts. It was so irresponsible.
And people in the
Um,
US didn't even have to prove their full income. They basically took your word for it. If you
Yeah,
had,
no, that happened here
oof.
as well. A
Yeah.
letter from the accountant saying that
Mm,
he thought you were good for it, but in some instances, good. Absolutely bonkers, to be brutally honest.
yeah.
When you take it from a prudent lending point of view. Now, they did potentially go overboard on the other side of it, here, but you could understand why, given what went on. You know.
Yeah. Yeah, they had to make big corrections and
Yeah.
now it's sort of come back to its I think the system is repaired. It's in the US it's basically balanced and if you the hard thing is when people are self-employed, you make good money but maybe you have a lot of write-offs so you don't show all of that on your taxes or you write a lot of it off so your net, on your
That's that old
taxes.
conundrum.
Yeah.
Showing what you earn on paper is really what it's all about. It's like they don't want to pay tax, so they reduce what they earn. Well, everyone wants to get at the world both ways, it just doesn't work.
Yeah.
You know?
Or
Um,
like if let's say you own a business or you're a small business owner or your work is seasonal. So maybe you make, $20,000 a month during the winter, but then it's very slow during the summer, whatever that business would be. And so that's hard for the banks to look at. So it's
and
for
the banks here
people.
wouldn't be worried about that. They would take a yearly view. They with self-employed people, they look at 2 years, and they look at take what they want to see the trend over 2 years. So it's not they
Okay.
in the full year. They don't just look at a small period of time. They do get forensic, and the paperwork involved with self-employed people here um, is difficult. Now, again, just to highlight, someone coming in from the US that's going down the self-employed route here is literally snookered for 2 years.
Yeah.
Um, but what tends to happen, a lot of the expats that come over in the main are coming over to the big corporations and they're getting big jobs over here. So they're coming in as employees rather than self-employed. But
Ah,
that
okay.
there are the odd exception to that, and for them it is definitely more difficult, or they have to wait for 2 years to basically demonstrate um, an ability, well, that their business can last 2 years, and this is
Hmm.
what they earn in those 2 years. So um, it's much easier being an employee to
And
get
most,
a
like you said, most people come over from America at least, and they're probably working in a tech job or coming over because they have a good job with a company who's transferring them or something for,
absolutely.
yeah.
Do you know what I think would be a great idea, actually, and we might try and tease this or line this up, is actually get one of my American clients on board to talk, to come on board if they're not too shy and join us for a conversation around this, because I think that someone even who's just gone through the process here would even add greater
Yeah.
insight into this, because I think it's a very useful conversation for anyone coming into Ireland looking to buy a property, whether they're from America, Canada, or wherever. I have a lot of clients also from South Africa, who I think it's quite a similar um, country or sort of mechanism to America.
Mm, I'm not sure. Yeah, but that would be great to have we could get one of your American clients just from a consumer perspective,
Yeah,
right?
yeah, no, the few in my
Yeah.
mind, it's if I can say the nice words, so telling someone that you're going to be interviewed doesn't always sit easy with people. It doesn't sit easy with me when I'm getting
Yeah.
asked.
You do these
Um,
podcasts begrudgingly, huh?
absolutely, but you make it very easy for me, Nolan, so I appreciate
Well,
that.
John, let me ask you this one, and as we're wrapping this up, more or
Yeah.
less, in the U.S., when someone is doing a transaction, you have the buyer's agent, the seller's agent, the buyer, the seller. There's a neutral third party who handles documents, who communicates with the banks and with
So
the
in this
basically,
case, it's the lawyer, which would be the American term. Here, it's the solicitor,
okay.
right? And the solicitor, 99% of the time, is the solicitor. It's a common solicitor. He's paid for by the client, but he has a duty to the bank and has a duty to the client. He basically will check the contracts to make sure that the buyer, so he's protecting the bank and the buyer to make sure that the contracts, that what they call the title deeds, are clean. That there's
Hmm.
nothing, you're not buying a property, say, that has a garden that isn't in the map. So I'm making things up here, by the way, but that kind of, so there can be no future dispute. A,
Hmm.
to protect the bank, because they own the property really until the
Yeah.
mortgage is paid, and then ultimately to protect the buyer for when the property is theirs, and basically the solicitor will get the deeds from the seller's solicitor, and his job is to give that to the bank so that the bank holds the deeds until the mortgage is cleared. Okay, so the loan offer, all the closing documents, all the contract go, as you put it, that third party in this country is the solicitor, and they were the profession that I was saying don't move as quickly as I would like. But in
Yeah.
fairness, there's a lot of detail they need to get right, so that, because the book stops with them if there's any legal issues, if there's any kind of disputes. Well, they could be sued if they haven't done their
Yeah.
job.
So that's interesting. That exact role, the solicitor, exists in the US, but you may not realize this. It depends on your state what that looks like. So some states are attorney states where you use a real estate attorney. And some
Okay.
states, a lot of states are title and escrow states. And in those, like California, and in those states, there's some counties that have a title company and then an escrow company. And there's some counties that have title and escrow as one entity and one company, but
That
they're the
sounds
same thing.
confusing.
They're holding the funds, they're collecting the documents, they're
Yeah.
going down the list from the lender, approving conditions, they're, making sure that the deed is clean, that the title is clean, and they're the ones where you go in and you actually walk in to do the signing as the seller, you walk in as the buyer at the end, and you're signing the real estate final paperwork and also the loan paperwork. They're the ones that then, get the funds from the bank, and then they're the ones that register the sale with the county.
Yeah, and that's the
Yeah.
exact same here. They control the money. The money gets sent from the bank to the solicitors, and but there's a solicitor on the seller side then as well. And then
Hmm.
this basically the solicitor gets the money, then sends it to the seller solicitor.
Oh, interesting. So
So
let me ask you this.
the solicitor representing the buyer also represents the bank. The solicitor on the side of the seller is just completely representing the seller.
Yeah. Interesting. Very interesting. So let me ask you this. When everything is done and it closes and, who gets to call the buyer and say, hey, your keys are ready, come pick them up?
99% of the time, that's me.
Yeah.
Well, no. Sorry. Well, my favorite phone call is ringing a client and saying, go get the keys to your house. But that's me probably taking a little bit more credit than I probably deserve, because ultimately the money then goes to the solicitor, and the solicitor has to send it to the seller solicitor, and then they get the keys to the house, right? But once, as far as I'm concerned, once the money leaves the bank, 99.9% of the heavy lifting's done, and you're at the
Yeah.
final. You're at the final stage. So I want to take some. I love that phone call. It's one that you're.
Yeah.
I give a lot of bad news throughout the process in terms of the banker said this, the banker said that. It's a delay. So there's a whole. So don't try to take that piece of joy away from me. That's what I would
No,
say.
so that's what I mean. That's the best phone call ever. And the buyers,
Yeah,
especially first time buyers, are on pins and
I know
needles
the level of
waiting, right?
gratitude you receive.
Yeah.
Um, like sometimes it's they give you more credit than you probably deserve. And some of the reviews that we get, and I'm kind of cringing at them, thinking, okay, that's yes, we've only done our job in a way, but it's always nice in any walk of life to be appreciated for what you do.
Yeah, absolutely. So, yeah, those are
I,
very
I
interesting
do make it a
differences.
business of a lot of my communication is via email, but I always make my business of making a phone call if it's bad news or if it's good news. I will make
Mm,
that call because
yeah.
both are worthy of an human conversation. If you're just collecting documents or there's some issues from a time efficiency point of view, emails is a better way of actually communicating. But there are times when you're given bad news, I wouldn't be sending an email. I'd be having a
Yeah,
conversation with
yeah.
the person.
Which is just good service, right? But yeah, these are some very interesting and important differences for people to realize between the Irish system and the American system in particular. And of course, you could coach people more to get started, get ready, get, prepared. One question before I let you go, Ev. I know you have your beautiful Sunday dinner with mom and the family. Here's a quiz for you. Do you know the difference between a real estate agent and a realtor?
Well, I would have thought a real estate agent in Ireland is the guy who sells the house. My my understanding of a realtor is the person who represents the buyer and brings them in the US to all the different the houses that might be on the market. That's that's my crude. I could be miles off the mark, but I don't think so. You tell
Yeah, it's
me.
it's actually and a lot of people don't realize it's a very simple thing. A real estate agent is just a licensed real estate salesperson with their brokerage. So they could represent buyer or seller. A realtor is
Okay,
just someone who is a member of the National Association of Realtors. So it's just a big group. It's like another layer of credibility and basically you're a member of this big massive organization. There's probably like a million plus realtors or real estate agents in the US. So, and then there's California Association of Realtors, there's Sacramento Association of Realtors. But yeah, that's basically the difference. A realtor has an extra level of accountability, legal protection,
okay.
licensing, Yeah, so not a huge difference, but it is subtle.
Yeah,
So
I
you
was probably using the definition of real estate agent as in the Irish version of it, so that's
yeah.
kind of where I was coming from.
That's great. And so, of course, if people want more information, if they're Americans listening, they're headed over to Ireland soon and they want to get started with buying, they could go to your website, jcmortgages.ie, and there's actually a small section just for Americans.
It
But
is.
of course, they could just contact you. There's even that pre-approval form
Yeah,
on
and you
your
know what I'm a big believer in is getting that roadmap out to people, because
yep.
buying a house is a journey and it's not something you wake up and are ready for. So if you're thinking of coming over or have just arrived, or suddenly you've been here a year and you want to make it happen, well, a conversation with someone like me to let you help you understand where you actually are right now and you want what you might need to do is of massive value. So you don't waste a huge amount of time um, looking at houses, falling in love with a house, and then finding the rules are against you at a particular point in time.
Absolutely. Absolutely. That's great information. And then yeah, we'll make sure to put in the show notes here your contact information, your website, where they could get that roadmap and
Brilliant.
start it with you, your email. And so yeah, thanks so much, John, for the information.
Fantastic. We wrap it up.
Yeah, let's wrap it up. Let's do a outro, just TN Mortgage 13.
Well, thank you everyone for listening to Norman and myself's number 13 T and Mortgage podcast. We covered a lot there today, Norm.
Yeah, that was a good one. I think we got people will get some value out of that, and of course, it'll probably bring up a lot of questions. They could contact you, and yes, even Americans can live the dream in Ireland and buy a property, and so you just have to do it right with John's help.
Thanks.